Welcome everyone to binary.com, the weekly live room here on Mondays. As always, we're going to take a look at the charts, market price action, and the candlesticks, for instance. So hang on, stay tuned for that. Before we actually look at the charts, we are taking a look at this webinar presentation to, for instance, explain the risk disclaimer. Trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here, and as always, we thank you for your attention. If you want to take a look at the recording, either one more time after this webinar, or if you are not able to catch the live room, take a look and register with your name and email at blog.binary.com/weeklytradingroom. So that's one way of taking a look. Of course, the live session is on Mondays at 8 a.m. UK time. As always, we're going to take a look at these 5 pairs and take a look what's going on this week in the calendar point of view. We have a Canadian bank holiday, construction PMI on the pound, Tuesday the 5th of August. We have cash rate on the Aussie. That's something to be aware of and careful of. Aussie, big announcement tomorrow. We have Euro press conference and interest rate on Thursday, and pound interest rate on Thursday. So those are biggies. And Friday we have a Bank of Japan press conference. So those are good things to be cautious of. Let's take a look at the charts. Let me make this a bit bigger. Good. There we go. So what we have today is the euro dollar basically bouncing up a bit. Now if we take a look at the daily chart here, we can see that on Friday the NFP results came in a bit lower than expected, although they were above the 200,000 level, which in my opinion is still a pretty decent level. But still, the euro actually did get a bounce to the upside, had a kind of engulfing twin right at the bottom here at the minus 272 target. As we can see, what minus 272 target was that? Basically, of this downside here, you can see price falling to from 140 to 135, and then retracing back to the 38.2 fib, and then falling down to its minus 272 target at 133.70. Price bounced off of that. So is this an A, B, C correction, or is this the start of a 1, 2, 3, 4, 5 wave count? Well, the key level, in my opinion, is the 135 resistance. It was support, can now become resistance. That's point 1. Point 2 is that if it is a wave 4, it shouldn't retrace into the wave 1, which is at 135 is the bottom. And if this is going to continue, we should not break above that level. All right, so that is something a key level. If we do break above 135, and especially 135.50, we might have some space up to 137, 137.50 as a bullish rebound. If we stay below 135, it looks more potentially like resistance for more downside down to 133, 132, 131, etc. So that depends. Until that point, we can put a fib from here to here. You can see the 38.2 fib should be the bouncing spot at 135.95. We already stopped at the 23.6 fib at 134.50. So until we get to that 38.2 fib, price could retrace up to it and then move down again to lower ground. All right, so let's take a look. One more thing regarding the 133 level here. Why is that 133 a target? Because it's this bottom here on the weekly chart. The same is true for this bottom here at 131 and this bottom at 127.80. All right, those are all bottoms. And if we take a look at the weekly, what do we see here in the weekly chart? Basically, if I take away this daily fib quickly here before it blocks too much of our vision, there. What we had basically here in the euro dollar is a rising wedge, right? There's a rising wedge formation. We broke out of that rising wedge and starting to fall down to we're starting to fall here to the downside, of course, and trying to break through another trend line here. If you connect these bottoms, let me make that a bit higher. In fact, there, these bottoms here, we also broke out of that trend line. So there are a couple of trend lines already broken. The bottom of the rising wedge, these orange lines, then the second orange line here as well. The only thing is that last week was a bit of a doji with a wick at the bottom. So we'll have to see if we get a bit of retracement for that downside. All right, this is looking bearish. Question is when and where we could expect it. If we break 135, that bearishness is out of the window though, for the moment. This is the 4-hour chart, and you can see very nice momentum to the downside. And price could be, for instance, in a wave 5 of wave 3 as well. This does not have to be necessarily, I would say, the end of this downside on the daily chart, because you can see here, what we're looking at as a potential wave 4, but it doesn't have to be the wave 4. It could be the wave 5 out of 4 out of 3 actually. If you look at it from this way, this is 1 here, this is 2, this is 3, but 3 could not be finished. If you look at the 4-hour chart, we could have a 1, 2, 3, 4, 5 of 3. So that is possible as well, by the way. Still, the same analysis is valid. I would not expect a deeper retracement than 135.10, 134.75. Same scenario. The only thing that could happen is that we go up there, fall down to 132, then bounce up again to, for instance, let me take a look, to, for instance, now I'm putting a future fib, a fib on the future price movement that we're expecting here. Price goes up to 135, then falls down to 132, and then price could go back to 134 to fall down again to, for instance, 130. All right, that's what could happen. Anyhow, for us, most importantly at the moment, this is a lot of future thinking at the moment, but for us at the moment, if you look at the 4-hour chart and we put a fib on the wave 3 of 3 like this, wave 4, move 4 should not go above this resistance. So that's the most important thing to remember. If we then look at the 1-hour chart, what I'm expecting is price to go back down, maybe to retest the 50 or 61 or 78.6 fibs here at 134, 133.80, and then bounce up to 134.75 and then move down again. All right, I would expect price to bounce off this support line, for instance. Those are all scenarios that could happen. Now, if price breaks through this orange line to the downside, obviously something else is going on, and in that case, price is looking more bearish. But for me, real bearishness could only occur if we break through this bottom, the 133.70 bottom. Until we break that bottom, it is looking, this 1-hour chart is looking bullish for a move up to 134.75. So anything in this zone is bullish up to 134.75, then it looks bearish again to me. All right, so this downside here, if price does push down, in my opinion, looks like a discount for upside, and then if it does get to the upside, it's a discount for downside. This will only change if we break through the bottom. Then I would change my view and say, okay, this is not as bullish as I think on this hour chart. Don't get me wrong, the long-term picture is bearish, in my opinion. All right, but the hourly chart looks bullish until we get to a resistance spot, and then we can expect and assume the resumption of that downtrend. So bullish short term, but bearish in the long term. Let's take a look at the pound dollar. Pound basically falling fast, and the question is if we have reached the end of this downside fall. It's been really a big fall already, about 400 pips within a couple of weeks. Good fall. And the question is, are we ready for a bit of a correction like the euro dollar? Well, the pound dollar is not as on the lower time frame as bullish as yet as the euro dollar on the lower time frame. Once again, both are looking bearish on the higher time frames. If you look at the 1-hour chart, I would say this is a good trend line to keep an eye on, because if we break above it, we could expect maybe some correction to the upside. How much correction is the question? Well, if you look at the fibs, what I would expect is putting a fib from here to here, and I would not expect a bigger retracement than, for instance, the 38.2 fib, the 50 fib, for instance. Those are fibs like 169.20, 169.50. That's the max where I would expect price to go before we get downside again. All right, that is if we make that upside. Other scenarios that price keeps falling, and then probably we'll see a fall down to 167.30, 167 before we see a relief to the upside. Once again, if we break above this orange line for some upside, I would expect to go up to these fibs for and then more downside. So long term looks bearish. Why is that? Because if you look at the daily chart, we had divergence between the tops, but also we broke out of this uptrend channel. That's been the first time since a year of this uptrend that price has broken out of that uptrend channel. That is the primary cause of this potential bearishness. Now, obviously, there's a weekly bottom at 166.90, 167 that could provide another bouncing spot for upside continuation. If that does happen, we could see price continue with the uptrend. If we do break below 167, then long-term bearishness is probably going to happen, and we might see a correction of price for a substantial downside. Let me take a look 1 second. Here, this is the fib we can put on from top on the weekly chart to bottom, and price could, if we break below 167, 166.70, sorry, we could retrace all of these fibs even down to 153 eventually, and retest this bottom here. So that's something that could happen. But we first need to break the weekly support, and until we break that, we really don't know if that price, of course, will go there that deep. But if it does, there is a chance that it will. For the moment, though, key level 167 support, that could be a bouncing spot for uptrend continuation as well. In the meantime, though, on the 4-hour chart, this is falling fast down to the magenta line, and it can keep falling fast unless it breaks above this orange line. If it does, yeah, I still think it will continue falling, but from a higher level, like the 50 or 38.2 fib. And that's about it. That's about it at the moment. You can see very sharp fall on this pound dollar, and on the 4-hour chart looking bearish. The only thing that could happen is a 1-hour pullback to the upside before we fall again. And of course, the big question is, what will happen when price gets to the magenta line? A bounce or a break? Even if it does bounce at this 167, if price moves in 3 waves back to 170, it could be weakness and further downside. If price bounces at the magenta and then starts to make 5 waves up, it is looking more bullish. Alrighty. So, if you have questions, let me know via the chat. That said, let's take a look at maybe still quickly at the candles. You see very bearish candles, despite the NFP on Friday caused bullish candle on the euro, but not on the pound. If you look at the weekly candle very bearish, the close near the low. So the bears remain in control here for 4 weeks, 3 weeks. Last week too, the euro dollar had a bit of a weakness on the bearish side. The pound dollar doesn't. The odd USD. Well, the odd USD is a bit different. It basically is looking more of a mixture. It did push through wait, let me get rid of this fib here. Okay. It did push through this support line, which indicates a potential fall. Right? If you look at the orange line, we pushed through that. That is true. However, if you look at the entire zone, here it's going sideways as well. That's something we have to be aware of as well. So both are valid. We have to see if we can push through magenta 92 for further downside. That would be a key level to keep an eye on. Friday was a slightly bearish candle. The weekly was, Friday was slightly bullish. The weekly is bearish though. So is this a rising wedge? It could be, but we need to break through magenta here to the downside. We need to break 92. However, if you look at the most recent price action on the weekly, we do see bearish candle followed by dojis and then the bearish candle. So it does look bearish slightly, But the big zone here on the daily, as you can see, is sideways. The 4-hour chart, there we go. Magenta 92 in the way, and price is kind of like stopping at the broken support here now, it's becoming resistance. That would not surprise me if that is a resistance spot at these broken support levels for more downside. We see big wicks on the 4-hour chart. That could be a serious rejection zone here on this odd USD for the fall down to 92. So that is looking bearish until 92. Unless price breaks above 93, above this resistance, if price manages to break above 93.30, well, then obviously there's some bullish rebound potential here on this odd USD possible, up to maybe 94, 93.90, or even 94.60, the red line there. The dollar yen. Let's take a look. Dollar yen had a sharp upside here, and it continued up to, well, the resistance line on the daily. Let me take a look. I actually broke through that line a bit. Let's take a look at the 1-hour chart here. You can see the upswing very strong. Then had a double top on Friday with the NFP and retraced lower. So it was a strong upside, but the question is here as well. You can see it strong run up after we broke the orange line on the 4-hour chart. The question is, though, that upside, is that retracement? It could be, because we bumped into yet another resistance level at 103. The next after 103 is 104. All right, so if we break above 103, there's some space to 104. All of that is strong resistance. You can see anytime the dollar yen went up to 102.80, 103, 104, it bounced in the resistance and moved back down to 101. Can that happen here again? Yes, it could. So that's something we have to be aware of. Dollar yen is just going sideways on this chart. So what that means is that if price is now back at the top of that sideways zone, it has a decent chance of finding that resistance again. If it doesn't, there's some space to the upside, but not much. From a weekly perspective, we really need to break above, or a monthly even, we really need to break above this darker orange line, above 104 for a breakout up to 110, 115, 120. If that doesn't happen, there's a chance that price goes below 180, below the green line, and falls maybe to retest 97-ish, the blue line here. So those are the lines in the sand. Here you can see the consolidation on the weekly. Break below the consolidation or above it. That's basically what we're waiting for. Until then, price can bounce up and down between those levels. XAU USD is just bouncing back and forth at the moment in this kind of like falling wedge type of formation, and price not going anywhere really, just staying in between support and resistance. It has 1280 as a bottom here, 1310 as a resistance. All of that though happening, that wedge is happening within a wedge. If you look at the daily, with the orange line at the bottom and the magenta line at the top, really not much space at the moment on this contracting wedge on the XAU USD. So there is really not much to look for, I think, in my opinion, regarding the gold. I would want to see a break out of this zone, out of the basically this the wedges, the tighter and the wider wedge here, before finding it appealing to trade it to either side. Other than that, the Kiwi finding a lot of bearishness, but it too, like the Aussie, has an important 84, a round figure and bottom to deal with. By the way, that is something you have to be aware of. If we break below it, could be some bearishness down to 80 maybe. If we bounce, maybe we can retest the top of 88. All right, so something to be aware of. On the hourly chart, you can keep an eye on that, maybe by using this trend line, for instance, here, and waiting for a break below this level or above this level as a contracting triangle. Dollar CAD has retraced up a lot, and Well, let's see. It is fighting through a lot of resistance, so maybe it can continue with that. But obviously, this is a big, big momentum. There is a lot of CAD weakness at the moment, but we have to be also aware of the fact that price is still at a resistance level where it is 109.50, 110 are resistance levels here, so something to be cautious of. A currency like Euro, for instance, is channeling down in this blue downtrend channel, and price not able to was at this support level right here. In fact, could be back at a resistance spot for more downside. Something to be aware of, that's possible, like the pound odd too. So we're at a bounce or break spot in that regard. A break below this orange line basically could be the break to the downside. Obviously, a break above it could be a daily breakout to the upside. Well, folks, that would wrap it up for today. Thank you so much for joining. I don't see any questions, so everything was hopefully clear. As always, I thank you. Next week, we don't have a session. I will have 1 week off, but we'll be back on Monday, the 18th of August. That's 2 weeks from now, and we'll take a look at what we can expect for the remainder of August and actually the fall of 2014 as well. So make sure to join then. blog.binary.com once again /weekly trading room if you want to get the recording. I wish everyone a pleasant August. It is a good time to take some days off because of the market that is usually a bit slower in the month of August. So, as I will also take 1 week off to enjoy the summer and the sunny days. It's always a good moment, with the market a bit on the slower side. Well, wish you all great trading and a great week, and see y'all soon. Cheers.